Thursday's market closes saw cattle and soybeans to the plus side with corn and wheat lower. Randy Martinson is back with analysis. Okay, corn, new lows for the move. Was that because of the lower wheat market, or what has been continuing to put pressure on that market? Because we had a lot of good export and trade news.
We did. I think it's a combination of the lower wheat. Wheat seems to be pulling. I mean, they're tied together yet, and we're seeing the wheat pull it down a little bit. But I also think the fact that we're looking at really good planting progress and the idea that, the 95 plus acres are going to get planted, maybe even a little bit more. We've got the report coming out on Monday, which I think the trade is also anticipating to see bigger stocks for 2025.
And Randy, the dollar was sharply higher on Thursday, which also pressed the market too, right?
Oh, that's a good point. I mean, yeah, I mean, because we're looking at exports and demand for corn to help kind of drive this, and wheat for that matter, with the higher dollar, that certainly did put a little pressure in on both of those markets.
Overall, though, when you look at the UK deal, there were some carve outs for ag, but beyond ethanol and beef, was there some disappointment that there weren't other commodities included?
Yeah, there was. I mean, the market was disappointed in the numbers or in the fact or where the trade deal came in. I think most were hoping to see a little bit more corn, a little bit more soybeans or soybean oil, some other products to be involved.
Meanwhile, you had the soybean market, which actually was a little bit higher on Thursday. Was that export or demand news?
With the bean oil up sharply today, that gave it a little bit of support. The demand, I think, added a little bit as Pakistan came in about 225,000 metric ton of soybeans overnight. So I think that's adding to it. And then also, again, the fast planting progress, knowing that we're going to put the corn acres in, maybe we'll see a few less soybean acres.
And new contract highs again in live and feeder cattle futures, and again record cash. Hard to believe we can be at these levels.
It is. I mean, we broke above 300 in the feeder cattle market. Strong demand. Strong cash bids. I mean, it seems like a broken record, but the cattle market just doesn't seem to be able to find anything to slow it down right now.
That is true. All right, thanks so much, Randy Martinson with Martinson Ag, and we'll have more Ag Day coming up.